The JSE-listed real estate investment trust, Emira Property Fund, has announced some strong operational results for the 9 months to its financial year that ended in March. Emira owns a number of diversified properties in industrial parks, office parks, and the residential sector, and it says it has delivered a stable performance notwithstanding South Africa's unprecedented rolling power cuts and the major impact they have on the industry. We are now joined by Emira CEO Geoff Jennet for more on the developments in the company and the property sector in South Africa. Geoff, thank you very much for your time this evening. The property sector, fast consumer goods sector and the retail sector has been saying a lot about what's happening with load shedding and the impact thereof. Talk to us first about how you've managed to buck the trend in the real estate investment trust space with this stellar financial performance.
I think it's been a number of factors. We've been investing into our properties for years. We have an excellent Emira team. We've got great service providers, and we're all pulling in the same direction to make sure that we deliver properties and space with excellence. And part of that has been that we started the journey of investing into our own PV farms back from 2015. We have 9 farms. We generate 10 megawatts peak kilowatt hours capacity. And we've got generators in most of our centres, so we've got the backup there. So we certainly feel that we can provide as much as we can for our tenants, and it's certainly come through. And you've seen that in terms of our vacancy rate being a 4.7% rate across our whole local portfolio in terms of the commercial, retail, industrial and office space.
That has come at a cost, though, because between July and December last year, you spent 16 million rand to keep the lights on, but have now spent 146 million rand in what you call tactical upgrades. Many of these focused on energy efficiency, solar plants, and installing backup power. How do you see the electricity crisis impacting on your group in the next reporting period?
So I just need to correct that a little bit in that the 146 million rand is the capex that we spent across our portfolio. As we always do, we spend between 100 and 200 million on our 9.8 billion rand local portfolio on a yearly basis. Only a small portion of that was towards the electricity, providing backups and so on. The 16 million rand that you referred to was our diesel cost bill for the 6 months to December, and we're now at a running total of just over 27 million for the month of to the 9 months to March. So you can see that in the last 3 months we've spent just over 12 million rand on diesel. Now, if we keep on going at load shedding level 4 to load shedding level 6, it means we're burning, just as Emira itself, close to 400,000 litres of diesel every month. And so you can then do the maths in terms of how significant that is. But I think what's quite important here is that if you're going to be providing space, you need to make sure that you have the ability to keep the lights on for some of the time. And so that's why you've got generators. And that's a cost that our tenants have to bear, that the economy has to bear. And, and that's why we're only recovering around about 84% of that. So it's certainly a big worry. But I do have faith, though, that in the level of renewables that people are investing into, that will be coming on stream in years 3, 4, and 5, should certainly start to alleviate that. And hopefully we're hitting we're in the worst stage at this point in time.
Geoff, how are your tenants coping with the rise in interest rates, the inflationary pressures, and the poor economic performance overall? Are you as impacted as other rates when it comes to how your tenants are impacted?
Yeah. So it's always higher interest rates are there for a reason, to counter high inflation or higher inflation and to protect the currency. And not much that you can actually do as an individual or a landlord or a tenant on the ground when it comes to interest rates, other than entering through hedging, that if you've got borrowings, you can look to hedge those. There's certainly an impact because it takes more money out of the system. And just to give you a perspective here, Emira has 6 billion rands worth of debt, of which 30% of that is subject to floating interest rates. And so so that's basically 1.8 billion rand. So for each 1% movement in interest rates, that takes out 18 million rand of income from our distributable earnings that's available over a 12-month period. That's pretty much 3.5 cents. So when you're in a situation where from June 21 through to now in March 23, you've had a 425 basis point hike, you can do the math. That's a significant cost that we're having to incur, which has then meant that our growth is not coming through. But it is something that it is a worry for us. But at this stage, our tenants have been paying their rentals, and you can certainly see that in 101.6% collection rate. And so at this stage, we are managing it. But it is a concern for the well-being of tenants, well-being of corporates and individuals and our customers in South Africa in the months and years ahead.
Geoff, briefly, I saw something that is quite interesting in your results, that you've gained control of the specialist residential real estate investment trust, Transcend Property Fund. What is your aim as a company when it comes to that unit?
Yeah, so it's important for us to take control of Transcend. We did that last year. We went from essentially just below 40% up to 68%. So we're now in control of Transcend. We see that as an important diversifier into our portfolio. So now on our local portfolio, 20% of our exposure is to a more defensive residential sector. So we like the management team, we like the assets that they've got, we like the service providers, and it's a good little business. And so we're looking to make sure that we continue to drive meaningful shareholder value in that investment.
Geoff, thank you very much for your time.